What up, YouTube, man? I'm Precious, guys, and I'm back with another video. Now, today's topic is so important because as you can see on the board, we're talking about how credit affects you buying a home. Alright? Now, I have people come to me all the time and say, I want to buy a house when my credit is not good. So we're going to talk about a lot of those factors that go into buying a home. And today, I'm going to go into a little bit more details, all right? Because credit is such a key factor. That's why I teach credit. That's why I wrote a book on credit. And it's so important when it comes to ownership, all right? So number one we're going to talk about is those interest rates. All right, now interest rates is the money charged for borrowed money. All right, so when you borrow money, meaning you take out a loan, there's a certain interest rate that may be charged, and that percentage is going to vary depending on your credit score. Now, first things first is if you have great credit, lenders are going to be a little bit more friendly. Okay, you may be able to get 5%, 4%, 6%. Whereas if your credit is not great, man, those skyrocket, those interest rates increase. When that happens, guys, what that means is that you are paying more of a monthly fee each month because of that credit score. Now, I just want to throw out there, it is not impossible to buy a home if you don't have great credit, but it will help you to save money. All right, now we all love saving money. Okay, now number two. All right, we're going to go to the positive side. Okay, now your credit may not be that great. All right, now a lot of people are married. We have a lot of married couples. Now, if your credit's not that great, you may be able to use a cosigner. Okay, so now the cosigner is someone that is added on to your loan. Now, granted, okay, you may have great income, you may have, very sufficient tax returns, but your credit is not great. But guess what? Your husband's credit is excellent. All right, so now you guys go in and partner up on this property and co-sign together, use their credit with your income, and you guys can get that home together. So it's the power of using your strengths and, understanding your weaknesses. And that's the realistic part. But you can use that cosign if you need it. Now, number three is, just like I said about the cosigner, is that credit is not the only factor, okay? Income is a very important factor when it comes to your credit. All right, how much money do you make annually? Okay, how long have you been at your job? If you've been at your job for 2 months, do you think that the bank is going to give you a loan and a mortgage? Most likely not. They want to see 2-year tax returns, all right? So that is not the only factor. Now, another important factor, guys, is debt to income. All right, so now what that means is that, let's say you make $30K a year. Okay, you want to get a mortgage for $100K, but you owe $60K in student loans. All right. Now, granted, they're going to factor in that percentage, which right now is at 43% debt to income ratio, to see if you can afford a mortgage based on the current money that you already owe. All right. Now, that new mortgage is going to be factored into that as well. So that means credit cards, that means student loan, medical debt, child support, alimony. All of those things will be factored in when it comes to, considering if you will get that loan or not. Now, number four, and I've spoke about this before. Now, I haven't spoke about it too much in detail. All right. Now, if you heard of a conventional loan is where usually you have to put down 20%, right? You got to put down 20% on the mortgage. So on $100,000, that's $20,000. Now, it takes a little while to save up $20K, right? So if you use the FHA, which is a Federal Housing Administrator insured-backed government loan, 3.5% down, guys. You could buy a house for $100,000 for $3,500. All right, and you gotta add your closing costs, your taxes, and your insurance. All right. Also, you have to have a private mortgage insurance when you go for that FHA loan. But this is so key because a lot of people feel like I just have to have so much money to buy a house, and that is not true. This FHA loan is very real. Now, this is very important, real quick. Now, the qualifications have went up to a 620 and very recently as close as to a 640. But that's still not a 700. All right, a 640, some of you guys are only a couple points away. All right. Now, We have some people who credit has just been damaged, okay? It's completely damaged. You know, maybe they had a foreclosure, they had a bunch of repos, student loans, late payments, a bunch of things on their credit, and they really need assistance, all right? Now, you have a lot of people that say they want to work on their credit. You have to understand if credit repair is needed for you. Now, I'm not going to say it's for everybody, but sometimes credit repair is needed. Because at the end of the day, every year that goes on, and you stop yourself from fixing your credit, and you keep saying, I'm going to fix my credit, and you do not do so, guys, it is stopping you from getting that home for your family. It is stopping you from living in the neighborhood that you want to live in. So understand if credit repairs were needed, okay? You don't got to go to one of the big companies and spend a lot of money. You can also do the process yourself. But understand if you need assistance. Because that is stopping us from getting a lot of things is that credit factor, because credit is power. All right, now when it comes to buying a home, like I said, your credit will be a key factor the same way, like I said in my last video, credit is a key factor when it comes to renting. Okay, because what it shows is that responsibility. Your credit shows your payment history. All right, how well have you done in the past? How well have you paid your bills in the past? That is your report. It is showing everything you owe. How well have you treated people in the past? Because we want to know if we're going to get our money back from you on time each month. So credit is a very important factor. It is not the only factor. Okay, so keep that in mind. Keep on striving to get your credit right to buy that home for you and your family. Even if you need to sell a home because you may not want to lose your home, okay? Because that affects your credit as well. If your home goes into foreclosure right now because of COVID, because of the pandemic, that will also hurt your credit. So you may want to consider a short sale. I will be doing short sales videos in the future, guys. So y'all go ahead and hit that subscribe button. Comment below, ask any questions. Follow me on Instagram. I am Precious Thompson, and I'm going to see y'all next time. Peace.